In this presentation, we will record the journal entry related to a note payable related to taking out a new loan from the bank. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here's going to be our terms. We're going to record that here in our general journal, and then we'll post that to our worksheet. The trial balance is in order: assets, liabilities, equity, income, and expenses. We have the debits being non-bracketed or positive, and the credits being bracketed or negative. Debits minus the credits equaling 0. Net income currently at $700,000. Income not a loss. Revenue minus expenses. The difficult thing in terms of a book problem when we record the loan is typically that we have too much information. This is the difficult thing in practice as well. So once we have the terms of the loan and we have the information, we've already taken the loan out, then it's the question of, well, how are we going to record this thing? How are we going to put it on the books? And if we have this information here, if we have a loan for $100,000, the interest is 9%, and then the number of payments that we're going to pay back are 36, then how do we record this on the books? Well, first we know that we can ask our question, is cash affected? We're going to say, yeah, because we got a loan for $100,000. That's why we got the loan. So cash is a debit balance. It's going to go up with a debit. So we'll increase the cash. And then the other side of it is going to be something we owe back in the future. And that's going to be note payable. And that's as easy as it is to record the initial loan. The problem with this, the thing that's difficult in practice and in a book question, is that we're often given, of course, the other information, like the interest and the number of payments, and possibly more information that can cloudy up what we're doing. And the reason these are needed is so that we can calculate interest in the future. But they're not really, we don't even need that information to record the initial loan. All we need to know is that we got cash and we owe it back in the future. And you might be asking, well, what about the interest? We owe interest in the future as well. And we do, but we don't owe it yet. And that's the confusing thing. Interest, although we will pay interest and we know exactly how much interest we're going to pay in the future, we don't owe it yet. Why don't we owe it yet? Because we're going to pay back more than $100,000. Why don't we record something greater than $100,000, you might say? Because we know we're going to pay more than $100,000. And that's because the interest is something that it's like rent. So we're paying rent on the use of this $100,000. And just like if we had a building that we rented that we're using for office space, we're not, even though we know we're going to pay rent in the future, we're not going to record the rent now because we haven't incurred it until we use the building. So the same thing's happening here. We know we're going to pay interest in the future. We know we're going to pay more than $100,000, but it hasn't happened yet. We haven't gotten the use out of this $100,000, and therefore haven't incurred the expense of it yet. So the interest then is something we need to negotiate when making the term of the loan. But once the loan has been made and we're just trying to record it, it's not going to be in the initial recording. It will be there when we calculate the payments and the amortization table. So the initial recording is pretty straightforward. We're just going to say, okay, cash is going to go up by the $100,000. And then the notes payable is going to go up from 0 in the credit direction to $100,000. So what we have here is the cash increasing, the liability increasing. Although we got cash, there's no effect on net income because we haven't incurred any expenses. We're going to use that cash most likely to pay for expenses possibly, or pay for other assets or pay off liabilities in order to help us to generate revenue in the future. But as of now, we increased an asset and we increased a liability. For more accounting information and accounting courses, visit our website at accountinginstruction.info.